Welcome back to Wall Street Podcast. Today, we're embarking on a deep dive into the Wall Street Journal's weekend edition, specifically the July 12th and 13th, 2025 releases. Our mission, to swiftly distill the most impactful knowledge and insights from these sources. Custom tailored for you, our high-information, time-sensitive listener. We've got a fascinating array of topics to unpack, everything from major corporate shifts and market dynamics to evolving social trends and the future of critical industries. Let's get right into it.
Indeed. We'll start by examining significant corporate strategy moves and market responses, then transition to the complex interplay of government, regulation, and economic policy. Following that, we'll analyze shifts in strategic resources and infrastructure, then into the ever-evolving world of tech, culture, social dynamics, and finally, we'll explore broader societal shifts and human elements. What's truly compelling here is how these seemingly distinct areas often, intersect and influence each other in surprising ways.
Absolutely. So let's kick things off with corporate strategy and market movements. U.S. stocks ended the week remarkably resilient, closing near record highs, even amidst a fresh round of tariff threats. For the week, while not surging, the Dow, S&P 500, and NASDAQ saw very modest losses, falling, 1%, 0.3%, and 0.1% respectively?
It's small moves, yeah.
That signals a market with some serious underlying strength, wouldn't you say?
It certainly does. And on the corporate side, Kraft Heinz is making headlines. Big plans to break itself up. A full decade after that infamous 2015 merger, the one orchestrated by Warren Buffett and 3G Capital.
Right.
The company intends to spin off a significant portion of its grocery business, including a lot of the Kraft products, into a new entity that could be valued at up to $20 billion.
Wow, $20 billion.
This move is squarely aimed at unlocking shareholder value, especially after the merger led to an astonishing $57 billion in market value just evaporating.
$57 billion erased. That's huge.
It's a striking reversal, yeah.
And it really highlights a broader trend we're seeing in the food industry, doesn't it?
Definitely.
Just look at the Italian candy giant Ferrero, which just acquired W.K. Kellogg for roughly $3 billion.
A clear play to grow their North American presence.
Exactly. And this comes right after Kellanova, the other Kellogg spinoff focused on snacks.
Right. They did that huge deal with Mars.
A massive $30 billion deal. So these aren't just isolated events. They really underscore a strong industry appetite for, consolidation and specialization. Companies are either doubling down on core strengths or shedding assets that aren't performing.
And that theme of strategic divestment and aggressive acquisition isn't just in the food sector. Look at sports betting. Flutter Entertainment is taking full ownership of FanDuel.
Ah, yes, FanDuel.
Acquiring the remaining stake in a deal valuing the platform at $31 billion.
$31 billion.
What's interesting here isn't just the valuation, though. It's the financing, mostly debt-based, and that extended strategic partnership with Boyd Gaming, running all the way to 2038.
Right, that Boyd deal.
That agreement gives Boyd a fixed fee per state from FanDuel's mobile operations in 5 key states. It really emphasizes the premium placed on established market penetration and, securing long-term distribution.
Makes sense. And switching to energy? BP issued a warning, didn't they?
They did. Lower oil and gas prices are going to hit their second quarter performance significantly, though they do anticipate production rebound later.
And this lines up pretty well with the International Energy Agency's forecast.
Exactly. The IEA projects global oil supply is set to rise 3 times faster than demand this year.
3 times faster.
Which implies a notable global stock build in Q2. So we're potentially looking at a significant supply glut on the horizon.
Okay. Let's shift gears now. Let's consider government regulation and economic policy. We're seeing some pretty intense pressure building on the Federal Reserve and Chair Jerome Powell.
Intense is right. White House advisors are reportedly escalating a campaign against him, citing allegations of massive cost overruns.
The headquarters renovation, right?
Yeah, a $2.5 billion renovation, apparently. And claims that he either lied to Congress or is guilty of gross mismanagement.
Wow. That's strong language.
It's not just criticism. It's framed as a potential legal pathway to remove him. And it's clearly part of a broader push for lower interest rates.
And President Trump has been very vocal.
Extremely vocal, calling Powell's performance terrible and accusing him of costing the country a great deal of money.
This instantly brings up that whole debate about the Fed's independence, doesn't it? Its historical independence.
It does. The journal highlights how the institution has fiercely resisted political influence since gaining independence from the Treasury back in 1951.
And they draw parallels to Nixon.
Direct parallels to President Richard Nixon's pressure campaign before the '72 election. It's that classic tug-of-war, political expediency versus institutional autonomy.
So what are the broader implications if this pressure keeps mounting?
Well, the journal suggests that if the perceived independence of the Fed erodes, it could significantly impact market confidence. And the long-term stability of the U.S. dollar, too, because investors really rely on predictable, non-political policy decisions.
Right. Predictability is key.
And Chicago Fed President Austin Goolsbee recently weighed in on this. He said that new tariff threats specifically complicate the inflation outlook.
Making it harder to cut rates.
Exactly, making it far more challenging for him to support the very rate cuts that President Trump is advocating for.
Yet, despite these significant tariff threats, the market seems pretty calm.
Remarkably calm, yeah.
Yeah.
Which indicates many investors are probably anticipating either walkbacks or maybe new trade deals rather than a full-blown trade war, betting it won't actually happen.
Interesting psychology there. Okay, on the topic of regulation, there's a compelling argument that deregulation could significantly boost the economy. Nuclear power plants being a prime example.
Right. The source details how stringent U.S. Nuclear Regulatory Commission standards, particularly that linear no-threshold rule for radiation exposure.
That sounds complicated.
It basically assumes any dose is harmful,
Right.
which has historically inflated costs and really prolonged construction times for these projects.
And the Trump administration is looking at this.
They've ordered a review of these rules, yes. And there's strong bipartisan support for advancing nuclear tech through the ADVANCE Act.
But the cost is still a major issue.
Absolutely. The journal notes that even with these efforts, the inherently high costs of nuclear development remain a substantial hurdle for new innovation. It's that constant tension, ensuring safety versus fostering innovation.
Okay, one more in this section. Senator Mike Lee's proposal about federal land.
A bold plan, yeah. Selling a small fraction up to 0.5% of federal land to states and developers specifically for home building.
With safeguards, though.
Important safeguards, yes. Excluding protected areas, giving states the first right to bid, but it still faces opposition from some GOP senators.
But there are examples where it's worked.
The article points to Nevada, where previous land sales spurred significant home building without apparent environmental harm. So it's an interesting approach to try and address housing shortages.
Definitely something to watch. Okay, that's a fascinating look at policy and economics. Now, let's shift focus to strategic resources and infrastructure. These are areas critical to a nation's competitive edge, wouldn't you say?
Absolutely critical. And the Pentagon recently struck a really unusual deal with MP Materials.
America's largest rare earths miner.
Exactly. Specifically to boost U.S. production of critical industrial magnets. And the Defense Department isn't just, placing orders.
They're taking a stake.
A 15% stake, investing billions and committing to buying the output. This isn't just commerce. It's a stark reminder of that delicate geopolitical balancing act when critical supply chains are concentrated overseas.
So it's a strategic investment in resilience.
Precisely. For components vital for everything from cars and wind turbines to advanced jet fighters.
And speaking of cars, EVs, we're seeing what the journal calls an inflection point in the EV market.
Definitely feels like it. The Volvo EX30 compact SUV is highlighted as a prime example. It's both affordable and high-performing.
What's the base price again?
Around $46,600. And it goes 0-60 miles per hour in a blistering 3.4 seconds with a 253-mile range.
That's serious performance for that price point.
It really signals that EVs are genuinely becoming cost-competitive with internal combustion vehicles, making them a viable option for a much broader segment of the market.
And it's not just the cars themselves, right? It's the whole ecosystem evolving.
Exactly. The widespread adoption of a single charging standard, NACS, is huge, combined with growing infrastructure from major retailers like Walmart and innovative startups like Iona.
So range anxiety becomes less of a factor.
It makes maximum range less of a concern for many drivers, yeah. Even with attempts by the current administration to maybe pull back some federal EV charging programs, the private sector is clearly stepping up.
Filling the gap.
This collective effort is really accelerating EV adoption significantly.
Okay, and then we have the quiet giant of private labels, Costco's Kirkland signature.
Quiet giant is right. An astonishing $86 billion in annual revenue.
$86 billion from a store brand.
Its philosophy is simple, but incredibly powerful. Consistently high quality at surprisingly low prices. This brand isn't just essential to Costco's overall success. It gives them immense leverage over other national brands.
Leverage is key there.
Co-founder Jim Sinegal views Kirkland as a crucial development, and the fact that every single Kirkland product requires rigorous CEO approval before launch.
CEO approval for every item.
Yep. Speaks volumes about their commitment to quality control.
Incredible. And here's something surprising from the journal. The resilience of business landlines. Didn't see that coming.
Me neither. Traditional landline phones, now mostly IP phones, aren't just surviving, they're thriving in the business world.
Where are they still being used so much?
Hotels, hospitals, customer service centers, financial institutions, they still rely heavily on them.
Why is that?
A combination of factors, really. Cost effectiveness, convenience, regulatory requirements, and even liability concerns. The global market for business IP phones was estimated at, what, $1.3 billion in 2024?
So not quite obsolete technology.
Far from it, it seems.
Okay, next up. Let's explore tech, culture, and social dynamics. We're seeing a fascinating evolution in exchange-traded funds, ETFs.
Yeah, index fund investing is becoming what the journal calls an extreme sport.
Extreme sport, how so?
Well, ETFs are becoming far more concentrated, particularly these leveraged single-stock ETFs, which dramatically amplify both risks and potential returns by tracking only a few stocks, or sometimes even just one.
Just one stock, wow.
And the median index fund holdings have shifted dramatically, from over 500 stocks back in 1998 to just 30 this month.
From 500 down to 30, that's a massive change.
It is. This trend means investors need to be far more discerning, really understand what they're holding.
So what does this significant shift mean for you, the investor listening? What's the advice?
The advice from the journal is pretty clear. Limit these highly concentrated bets to a very small percentage of your total assets, maybe 5%.
Just 5%, yeah.
That way, you can participate in the potential upside if things go well, without risking your whole financial future if they don't. It's about strategic exposure, not, all-in bets.
Makes sense. Strategic exposure. Okay, shifting to online discourse and corporate ethics. There was a significant controversy around a Sequoia capital investor.
Yeah, Sean McGuire's posts on X about the New York City mayoral nominee, Yovaran Mamdani.
What happened there?
McGuire's post where he called Mamdani an Islamist who comes from a culture that lies about everything. Well, they sparked a very strong public reaction.
I can imagine.
Including an online petition urging Sequoia to condemn his comments. This led to intense internal discussions within the firm.
A tough spot for Sequoia.
Definitely. It's a vivid illustration of how social media platforms have become this kind of battleground for corporate values and free speech, forcing companies to navigate really difficult ethical and reputational waters.
Tricky balancing act. Now here's something novel. Recycled vacations.
Yeah, it's a growing digital marketplace. Basically, it matches sellers of non-refundable trips with bargain hunters, offering steep discounts.
How does that work exactly?
Platforms like SpareFare and Aluxit let travelers buy unused non-refundable flights or hotel nights, often at 20–30% off, sometimes even more for last-minute deals.
And they handle the transaction.
They do, and they include fraud prevention mechanisms, like holding the funds until after the trip is completed. One traveler apparently paid just $1,200 for a $4,700 all-inclusive trip to Thailand.
Wow, that's a huge saving. So it's a creative way to recover some value from wasted bookings.
It's an ingenious workaround, definitely. But the article advises caution. While it's legitimate, travelers should still do their homework, like calling the airline to check name change policies, things like that.
Good advice. Due diligence is key. Finally, in this section, the Love Island USA phenomenon.
Still going strong. This reality dating show continues to pull in massive viewership. Huge appeal to both viewers and, well, singles hoping to get on the show.
How many apply?
Season 7 alone saw approximately 20,000 applications.
20,000.
And the show consistently ranks as a top streaming reality series. It really speaks to a powerful draw in popular culture, reflecting, evolving romantic and social dynamics.
Okay, let's move to our final content module, societal shifts and human elements. We're seeing some broader trends impacting communities and individuals, the U.S. facing a brain drain.
Yeah, that's the term used. Other countries are actively and aggressively wooing aspiring entrepreneurs and researchers.
Why is that happening now?
It seems to be happening amidst domestic research funding cuts and new, often more restrictive immigration policies here. The journal notes a concerning trend. Only about 40% of international students who earn a degree in the U.S. actually stay long-term.
Only 30% stay.
Yeah. This outflow of talent could significantly impact future innovation and economic competitiveness, especially as other nations actively promote programs designed to attract these very minds.
A critical issue for the long term. On a more sobering note, the article highlights a rising trend of police killings in rural America.
Yes, often contrasting sharply with the approaches seen in big city departments. There's a detailed case from New Mexico involving a sheriff's deputy killing a 17-year-old, Elijah Hadley.
Who only had a BB gun.
Correct, possessed only a BB gun. This specific case, and others like it, seem to illuminate a pervasive lack of de-escalation training and maybe the influence of shoot-first training philosophies that might be more prevalent in some rural departments.
So a widening gap between urban and rural practices.
It underscores that widening gap, yeah,
No.
in law enforcement practices and, consequently, maybe public support for them, too.
Yeah, even amidst profound challenges, the human spirit, resilience often shines through. There's an anecdote from Israel.
A really poignant anecdote from an Israeli bomb shelter during missile attacks. Despite the immediate danger, people remained remarkably calm, civilized.
And the uplifting part.
A cellist from the Jerusalem Symphony, who was also sheltering there, performed an impromptu concert, played Shalom Aleichem, a prayer for peace.
Wow.
It speaks volumes about the power of community, humanity, and fortitude in the face of adversity. Really quite moving.
It really is. And sticking with the theme of resilience, but historically, the CIA's book smuggling program.
Yeah, apparently their most successful Cold War operation wasn't covert military action, but this extensive book smuggling program in Poland.
Smuggling books.
It demonstrated the profound difficulty for totalitarian systems to truly suppress the word, the free exchange of ideas. Highlights the enduring power of knowledge.
Fascinating piece of history. Finally, a bit more practical. Men's generational style.
Yes, a practical guide. For Gen Z, the advice is how to dress for the office without looking like an intern. Think tailored shirts, intentional belts.
Avoiding big logos.
Purposefully avoiding overly branded items, yeah. Millennials aiming for quiet luxury without breaking the bank. They're looking at brands like Charles Tyrwhitt for dress shirts, Mango for loafers, Quince for cashmere. Subtle sophistication.
Okay, what about Gen X?
For Gen Xers, the goal is to look cool without seeming like they're trying too hard. Stylists suggest quality polos from Ralph Lauren or Burberry, maybe relaxed bomber jackets. Effortless style.
And baby boomers, often a struggle with pants, the article says.
Apparently so. The article recommends Lululemon's Utilitech Twill slacks for comfort and stretch, classic Banana Republic khakis for versatility, and even Levi's 501s for a timeless, well-worn look.
So something for everyone.
It really highlights how personal style adapts and evolves across different life stages.
That's a lot of ground covered, and a deep well of insights. So, what does this all mean for you, our listener? Let's get into our deep dive analysis. Let's connect some dots and explore the big picture. First question. Considering the direct political pressure on the Federal Reserve, the fluid nature of tariff policies, and the shifting landscape of government funding for critical sectors like rare earth minerals and EVs, what's the most critical factor for you, the high-level investor, to monitor for long-term economic stability and opportunity?
Well, what really stands out across these reports is that heightened tension between political maneuvering and established economic norms.
Right, that tension.
For investors, long-term confidence in the U.S. dollar and market predictability seems to hinge not just on fundamental economic data anymore, but increasingly on the perceived independence and resilience of core institutions like the Fed.
Perception matters.
Hugely. Political volatility, while generating daily headlines, also creates unique points of leverage and, of course, risk. The real task for you, the listener, is discerning between transient rhetoric, just noise, and substantive policy shifts, because those substantive shifts are what will ultimately dictate where stability and therefore opportunity truly lies.
That's a crucial distinction.
Huh.
Okay, next question. From Kraft Heinz's strategic breakup to Costco's Kirkland brand dominance and that shift towards highly concentrated ETFs, what overarching lesson can corporate leaders and investors draw about adapting to evolving consumer demands and these increasingly fragmented market structures?
I think the common thread here, spanning these really diverse examples, is the imperative for precision in value creation.
Precision, explain that.
For legacy giants like Kraft Heinz, it means unbundling, optimizing assets to better serve distinct consumer segments, rather than trying to be everything to everyone. For private labels like Kirkland, it's about that hyper-focus on quality and value to build fierce loyalty, often at the expense of traditional brands.
And in investing.
In the investment realm, the rise of specialized ETFs signals a market hungry for targeted, granular plays. So the overarching takeaway for any leader or investor is this: Success increasingly lies in understanding and rigorously serving highly specific demands, whether it's a niche consumer need or an investor's appetite for very tailored exposure. Generic, broad-brush approaches just won't cut it anymore.
That idea of hyper-focusing for value creation is powerful. Okay, final question in this deep dive. As we've explored the challenges facing rural law enforcement, the global competition for talent, and even those unexpected phenomena like recycled vacations and online social battles, what does this mosaic tell us about the evolving dynamics of human capital, community, and societal risk in 2025?
Well, these sources really reveal a growing divergence in experience and opportunity. They underscore the increasing importance of localized dynamics, everything from community support structures during crises like that bomb shelter concert, to the specific training gaps we see in rural law enforcement.
Local matters more.
It seems so. And concurrently, the fluidity of global talent, the brain drain issue, and the emergence of new digital marketplaces for practically everything. It highlights a world where personal networks and adaptabilities are paramount.
Adaptability is key.
For you, the listener, understanding these micro-level shifts in how people connect, work, and move across borders is crucial. These trends will increasingly shape labor markets, dictate consumer behavior, and ultimately impact the fundamental societal stability that underpins all economic activity. It's a complex, fragmented, yet highly interconnected landscape we're navigating.
A complex landscape indeed. What stands out to you most from this deep dive? Something for our listeners to mull over. We'll see you next time.